Hey, what is going on, crypto people? It is the Crypto Siege with another day in the life, in the crazy life that is the digital asset space. Good morning, good afternoon, good evening to each and every one of you. Wow, the market is doing what the market does. Word on the street is that Wall Street schemed, came together, BlackRock and Citadel by way of Genesis Trading to tank the market. Because once Do Kwon decided to leverage Bitcoin and purchase the amount of Bitcoin and attach it to the ecosystem of UST and Luna, the Wall Street guys realized that they could manipulate that market. And that's what they did. So both Luna token, both UST, and both Bitcoin. So all three. That's the word on the street. Charles Hoskinson had a very interesting thing to say about Wall Street and how they could give a F about you and I. Yet YouTubers will continue to promote Wall Street's products. I don't understand it. I really don't. Find out who owns the 401ks. Who owns the accredited investor market? Check who owns it. It's not you and I can guarantee you that. In any case, listen, the market is doing what the market does. We'll go over that. Some interesting stuff from John Deaton and Crypto Law. Very, very interesting stuff coming from Empire US. That is for certain. Very, very interesting tweet about true diversification of your assets. True diversification of your assets. We'll talk a little bit about that as well. I'm going to get into it because I got to get in here, get this done, and get some other stuff done. So, guys, listen, this is your XRP Ripple daily news in around 0 to 10 minutes. So let's do this. The Bitcoin dominance is at 41.7%. That's just not a great number at all. The total cryptocurrency market cap is at 1.93 trillion. It's down 8.5%. And again, Wall Street is causing this to happen because they owed money, doesn't want you to win. They do not want you and I to walk away from their liquidity pool. Like you have to understand that is the deal. They don't want you to walk away from their liquidity pool, which is why hashtag Gary Gensler is not your friend is not approving a Bitcoin spot ETF. He's only approving the futures ETFs because those can be shorted. And because Wall Street knows how to play the short game and tank the markets. They're trying to steal this asset space, this asset class away from you. That is the bottom line. That is the bottom line. So Bitcoin is at $30,447. Ethereum is at $2,200. XRP is 43 cents, guys. It's 43 cents. How many people you think have said, you know what, I just can't do it anymore, and I'm out of this space, and then turn into their bank accounts that's owned by Wall Street and turning to traditional financial products that's owned by Wall Street? How many people think that they just can't take it any longer? XRP is at 43 cents. Came into the digital asset space with the hopes of creating generational wealth, and Wall Street is trying to take it away from you. They're saying, no, 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 no. We know how to play the shorts game, and we got our guy in place, hashtag Gary Gensler, it's not your friend. We got him in place to keep approving these products that we can leverage, like freaking Bitcoin futures products. That's the game, guys. You got to get it. The market is down in a big time way. Wall Street has manipulated. You can't get on that blockchain, Wall Street, and not be discovered. You got on the blockchain. Word on the street, it was BlackRock and Citadel. Some people say Soros, and even a few people say that it might have been some people in competition with on the Convex Wars that someone might be in competition with that new 4 pool, not happy about it, and have done that. That would be the worst of worst, because we're talking about crypto people hurting other crypto people. That would be the worst and worst. But the majority right now is BlackRock and Citadel came together, and I'll show you some tweets. So listen, guys, double figure reds all over the freaking market, all over the market. Thor chain down 44.5%. The Rune token. Wow. So the market is bleeding for sure. It is bleeding for sure. Pax Gold, $1,850. Meyer Dex is in the top 100 again. Interesting stuff going on in this market. Curve token is $1.63. So, and it's looking like the sideways movement is going to happen for another 6 months. My guy DIY Investing is saying that he's not sure if we're on the 4-year cycle or not. He believes we may be on a little bit of an extended one. I'm going with the vast majority of my people, the vast majority of my guys saying sideways and then down. I'm going with that. I'm preparing as though that is going to happen. I'm preparing for as though that is going to happen. I'm preparing for that. So 6 months of just going sideways and then down means that it's just you're losing. You're just losing, and have been losing for, I don't know, over a year now. That's the way I see it. So I got to figure out, diversify our capital now into a spot where we can at least get guaranteed returns on this, not, on the market. So that is the deal. Let me see if I can share some stuff with you guys. Crypto Law put this out. Why the Empire referral is a turning point. According to the general principles of federal ethics, employees shall endeavor to avoid any actions creating the appearance that they are violating the law or ethical standards. William Hinman is in trouble, and perhaps he thinks that he can get away with this immunity that the SEC has. John Deaton says not so fast on that immunity thing, by the way. It says, whether particular circumstances create an appearance that the law or these standards have been violated shall be determined from the perspective of a reasonable person with knowledge of the relevant facts. A reasonable person aware of Hinman's full conflict of interest in all matters involving Simpson Thacher may perceive Hinman's actions affecting Ethereum as being a conflict of interest after Simpson Thacher joined the Enterprise Ethereum Alliance. Hinman may have violated the criminal prohibition against personally and substantially participating in particular matters that would have a direct and predictable effect on the financial interests of entities whose interests could be imputed to him. Even if all of the statutory elements are not met in order, make his actions a criminal violation. Those actions still violate ethics regulations. Hinman violated ethics regulations and created enough of an appearance of a potential criminal violation that an official investigation by the SEC's IG, OGE, and/or Department of Justice is necessary to make the determination of any potential criminality and to restore the public trust in the SEC's impartiality. Even if an investigation determines that Hinman's actions did not rise to the level of a criminal violation of Code 5 USC 208. Hinman violated ethics requirements and should be investigated by the SEC, OGE, and or the Department of Justice, and potentially disqualified from appearing or practicing before the commission in the future. It's a big deal, guys, and it's more and more of it is coming out for sure. More and more of it is coming out for sure about what this guy did. Make no mistake about it. Charles Hoskinson put this out. So here's a guy who's gonna, he's retweeting something from a lady named Anna. So here's the word on the street on Luna. I just hope that more and more of us realize that this is becoming an us against them. Charles Hoskinson on his video said institutional investors versus retail investors. You got to get the bigger picture. What is really, really going on? Hashtag Gary Gensler represents institutional and Wall Street money. And we have questions to ask ourselves. Are we going to participate and buy their financial products? Are we going to participate in the inflation of the month of fake dollars? And we do that by participating and holding our money in the bank. Like it or not, that's what you're doing. You're participating in the printing of money and the devaluing of the dollar, because every time they get one of your dollars, they're lending out 10. So got to think about, do you want to participate in increasing the money supply, which is ultimately making your dollar worth less? It's a vicious cycle. And you can get on YouTube and you do your YouTube channel, keep promoting these traditional financial products. You're harming your own dollar. It says here, forwarded from Anna. BlackRock and Citadel borrowed 100,000 Bitcoin from Gemini. It appears in their loan book. It appears in their loan book. They swapped 25,000 of that Bitcoin into UST. This was all done quietly in anticipation of the attack. Wall Street, institutional money. When the time was right, they called upon Do Kwon at Terra Foundation and said they wanted to sell a lot of BTC for UST. As it was a large trade, they told him they didn't want to move the market and asked if he would like to buy their large block of Bitcoin at a discount for UST. Do Kwon took the bait. And again, this is just rumor on the street. This is just people doing their homework and finding about it. Again, once you get on a blockchain, it's recorded. This conversation could easily be refuted by Do Kwon if it's not true. Because there's actually some rumor on the street, they're saying that Do Kwon knew about it. This attack. So who knows? So here it is. This is from, again, Charles Hoskinson. As it was a large trade, they told him. Now, he's not the one who's saying this. He retweeted this and said, so here's the word on the street about Luna. I just want to make sure I'm saying that correctly so you guys don't get it twisted. So as it was a large trade, they told him they didn't want to move the market and asked if he would like to buy their large block of Bitcoin at a discount for UST. Do Kwon took the bait. He gave them a huge chunk of UST, thus lowering UST liquidity significantly. At that point, BlackRock Slant Citadel dumped all of the Bitcoin and UST, causing massive slippage and triggering a cascade of forced selling in both assets. The real problem was BlackRock Slant Citadel knew that Anchor, which holds a lot of Luna, was a Ponzi scheme, they're saying. They offer 20% staking on APY, for Christ's sake. And this crash would trigger more withdrawals than Anchor can repay. These forced withdrawals and selling would trigger a massive sell-off in Luna, a crypto that a lot of people own, a lot of regular, average, everyday Joes owned, Bitcoin and Luna. These forced withdrawals selling would trigger a massive sell-off in Luna, and I'm saying this, and massively crush the retail investor, thus further breaking the dollar peg and wrecking the market further. BlackRock and Citadel can now buy the Bitcoin back cheaply to repay the loan and pocket the difference. Meanwhile, billions of longs and Bitcoin VAR were wiped out. This was pure market manipulation. Let me share with you Charles Hoskinson and what he said about Wall Street. You know, everybody's wanting Wall Street to get in institutional money. They're going to be the savior. Let's take a listen to Charles Hoskinson here.
Your portfolio. This was always the danger of inviting
here we go.
Recession, reallocate your portfolio. This was always the danger of inviting the Wall Street types in, is that they would just simply treat crypto like any other asset and label it as an exotic high-risk one. And when the markets go in not the direction they want, they dump it. The retail people are holding because they are opting out of a global system that's unfair, a global system that's frankly rigged. Seen it myself. I've been in the meetings. I've talked to the people everywhere I go. They don't give a fuck about sustainability. They don't care at all in any way, shape, or form about whether you live well. Your standard of living is the same as the standard of living of your parents, your
If this turns out to be true, and I don't see why it would not be true, because he is spitting, like he says here, Charles Carlson is spitting the facts here, sharing the truth. Again, guys, I can't point it out enough that the digital asset space represented an opportunity for you and I to walk away from traditional finance and being their liquidity. I can't say it enough. A dude who was in the inside, who was part of a company that did that, Shearson Lehman, institutional raking retail, said, and I'm quoting here, they are laughing at you when you participate in traditional financial markets. They are laughing at you on your 2X and your 3X and your 4, 5, and 8X. They're laughing at you, whether it's pre-IPO or not. Public, private, it don't matter. They're laughing at you. He just said it. He just said they could give a F about how well you live. In the digital asset space, and cryptos offered an opportunity for a level playing field, and one in which you and I were able to choose our own money and participate. Choose your own money and participate. Perform the banking function on a you and me level. In other words, also known as peer-to-peer. Where is Wall Street in a peer-to-peer transaction? Where is their slice? Where is their freaking cut on a peer-to-peer transaction? The only way they can get some of that is the VCs that are funded by Wall Street get in on these blockchains early. That is the fight, my friends. That is the fight. You don't have to listen to me, but you can listen to Charles Hoskinson. Let's take a listen again.
I've been in the meetings. I've talked to the people everywhere I go. They don't give a fuck about sustainability. They don't care at all in any way, shape, or form about whether you live well.
They don't care about whether you live well. I hope the YouTubers are listening and paying attention. Oh my goodness. All right, guys, listen, I'm going to end this video like I do all of my videos and remind you guys of this, that old money also known as Wall Street, also known as institutional investors, don't want you to win. They don't want us to win. They would rather that we remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. How good is your short-term game? The digital asset space, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating? Or are you standing on the sidelines promoting traditional financial products and institutions that don't want you to win? All right, guys. Listen, have a great rest of the day. I'll talk to you soon. See ya.